Thank you very much for coming here and joining the meeting. Thank you for being with us today. From management board, I'm alone. Kostas supposed to travel as well, but after he saw temperature 0 in Warsaw, he did everything not to do it. So in our agenda today, actually, there are 3 major topics. So we will update you about major corporate events and developments and financial results of Q4 and whole year of 2025. And then also give you further outlook of 2026. So first about the business units of ASBIS Group and their development in 2025. Basically, you know that Apple is the biggest vendor for us. And last year, Apple, however, had single-digit growth, 7% or about 7%. And it was very weak start in Q1 of last year, was oversupply and big price wars with illicit traders in Kazakhstan and Ukraine. However, we are finished quite well in Q4 because after launch of iPhone 17, demand is extremely strong. And my take is that because it's renewal cycle after COVID time, and it just started. So respectively, we have limited supply, we have shortage. And Q4 was quite strong, and we see actually the demand remains strong, and currently the constraint is supply. But we manage supply. ASBIS South Africa, who started Apple distribution from July of 24, demonstrated very good growth and results, established quite well. So ASBIS South Africa gained strong position in the market within 1 year. And what I'm happy to see and to announce that from September of 2025, they already became profit contributor to group. So it was one of the quite good, very good investments. ASBC, our premium and luxury retail business unit, grew 24%. Now we have it's like 58 retail stores and 8 B2C e-commerce stores. I will talk later a bit more in depth about that. Breezy trade-in business unit more than doubled the business, and they continue to grow. We gain number 1 position in CIS, but our major aim now is to expand and to develop in European Union and South Africa and probably in Gulf as well. And we are happy to support the growth. Consumer distribution last year was almost flat. And a major driver of that was because Logitech, who is one of the big vendors for us in that consumer route to market distribution, changed business model. So we moved from master distributor to distribute in Middle East and in South Africa directly all retail, right? It takes us time to develop it, but again, it's growing quite well together with private label and third-party brands. But core business of ours, IT distribution, that's where we face and demonstrate more significant growth, like ICT distribution for data centers mainly. And not only, it's got client computing as well, and different peripherals and finished products, computing products and peripherals. But it was the major growth driver is components and building blocks for data centers. And that's where we face serious growth, because we are one-stop shop and we are one of the leading distributors across EMEA for most of the vendors. So respectively, they select us to make and to conduct serious projects. And then ICT and the active equipment for data centers and building data centers. So these kind of value-add projects, it's again 120% growth last year. And it's just beginning. We have strong pipeline for data centers. We build data centers ourselves, but not housing, not passive or cooling equipment. We only focus on our core business, server storage and networking, right? NVIDIA and other vendors, they welcome and they want us to do this kind of installations ourselves. Of course, we outsource it to third parties, but we manage it. And we're comfortable to continue that. So this is a picture overall of 2025 dynamics. Okay, geographically, basically, we already reported that we developed back in 2024 our distribution. So most of the development to support the growth from distribution infrastructure standpoint, we completed in 24. In 25, the only project was, the project which was serious. We built up 20,000 square meter distribution center in Kazakhstan, in Almaty, to support the growth in that area. You know, Kazakhstan is the biggest country by revenue for group, driven by Apple, but not only lately. In Kazakhstan, we also do data center business, data center infrastructure development business. In terms of geography, we already announced, I just highlight that this year, next quarter actually, we plan to start local operations in Saudi Arabia. Market is big, we wanted to be there. We already have the business there serving from Emirates, but we see good opportunity to operate locally. And also next quarter, we're starting operations in 2 more countries in Northwest Africa, is Ghana and Cote d'Ivoire. So we studied and after studies and analytics and agreements with the vendors that they will support it, so we open these 2 local operations as well. So that's an update from geography standpoint, right? And about startups of ours. Look, the update is that all of them alive, all of them still promise and develop best-in-class technologies to impress the world. And most of them started to sell their products, right? And NRSL and Clevetura and others. Clevetura, they mainly sell in US market because the keyboards are quite expensive and user price is like €200. It's well adopted and accepted in the US and they do there. They also starting in Western Europe and in Middle East. So basically, we may be looking for partial exits starting this year or with Clevetura and Dispo. We'll see. Others are growing, let them grow. That's update on the startups. We don't plan to buy more. So we manage this what we got. Corporate updates. Okay, this slide is here again. Basically, what I have to say, interim dividend payment November 2024. You know that. New ASBIS store in Moldova and Bang & Olufsen flagship store in California Okay, let us talk more about retail business unit. So basically, you guys heard from us and you that, okay, this ASBIS, on one hand, is B2B company, that we have Apple stores somewhere in CIS countries, etc. But let me give you a full picture. What is a retail business unit now in ASBIS Group? It's not only 58 doors, what we have already. We position and we develop it as a premium and luxury retail business unit. And it is growing nicely, and it's not only Apple anymore. On premium side, we have acquired recently, and from January of this year, it's already in ASBIS Group, these 13 stores of Samsung premium monobrand retail here in Poland. And we will grow number of stores. I don't have picture yet how many. And Bang & Olufsen, this is luxury. And again, it's luxury monobrand retail with very interesting clientele to serve, because through this we serve it high net worth individuals and upper middle class. We already have 3 in CIS countries. We have 2 in South Africa, 2 in Italy, in Milano particularly, and 1 in San Francisco and California, which we opened in December of last year. But in California, it's only beginning. In next 3 months, we are opening 3 more stores. 1 in West Hollywood in Los Angeles, flagship store. 1 in Palo Alto, Stanford, and 1 satellite store in Orange County. And with this, we believe that setup in California will be good enough for us. And this is our first expansion to the US market. So this retail business unit, we decided to learn how to deal with this US market. Because in my dream, I thought that I was naive enough to believe that they have everything so easy to do business, no administration hassles, etc. Very simple taxes and everything computerized. No way. It's so complicated, right? But everything is it's settled already. We have good first experience. We manage it well. And this gave actually global scale and setup to this retail business unit. So our retail business unit became global. US, Africa, Europe, Central Asia. We plan to support the growth of it. It is profitable business for us as well. And completely new business unit, which we had recently after board approved in September. So we developed these robo cafes and robo pubs, robo bars, and etc. But and we aim and we're selling to third parties to operate. But after we saw, they raised my attention as well on P&L projections of conducting this business. We like it. And it's not only because of our technology, but because business model is good. Return on investment on this expensive coffee machine or kiosk beats more than 1 year and a half. And then very high margin on coffee market. I didn't expect, and it's growing market. And we do really also premium coffee. It's barista quality coffee, but our baristas, they not get tired and do not compromise after first 2-3 hours of work. They do consistently 24/7. And we populate it in the right locations. It's hospitals, it's universities, it's malls, and other public locations with good traffic, big office areas as well. and we tested and piloted already last year. So this year we are very comfortable, but we focus with our own retail to operate this retail business unit on our own in Emirates, particularly Dubai, because we do activations by cities, not by countries. We need to have good economy of scale. We need minimum 5 machines per city because each machine requires service. We have one here in Poland. We are piloting. We see how good will be demand here. But for sure, Emirates and Cyprus and Saudi Arabia, we already know. And it's a matter of population. So production is there. And we are minimum 24 more kiosks. And what I like is retail is detail, right? And retail is location, and location, right? Unlike brick and mortar store, this one I can put forklift and 24 hours move to another location if this location doesn't work for me, right? So good business model on that. So that's what I wanted to update you about this retail business unit. Why we want to develop it, what we want to do with that. Guys, so we don't have particular project yet. However, we see that this retail business unit is good subject to spin-off on IPO in 3-4 years from now. That's our strategic objective. Now, okay, I mentioned about B&O and opening of these new stores in California, and they have the major thing that we operate on platform. We have lots of sensors. It's lots of automation. We measure traffic in front of the locations. So it's really well automated business unit, and the machines as well. So we have predictive analytics of the health of the machines as well. And we not only see to use it ourselves, we sell it to others already. We finished development mid of last year, so for second half of last year we started populating them. We had production here in Poland. It didn't work well, so we moved production actually to Dubai because we see more demand as well from that market. So logistically it makes sense for us, but also it's too expensive here in Poland. Top line, last quarter 35% growth. Mainly again, it was combination of strong Apple, and because it's big, it gives serious impact. And the data center building blocks and components, which is fastest growth driver for us, the biggest contributor to the growth. We've been flat previous 4 years, from 21, then 22, war in Ukraine, then 23, issues with Kazakhstan, right? And 24 again Kazakhstan, and we were like more or less flat. Now, from 2025, or in 2025, you see 28% growth year on year. We are very happy, and it's also good growth on profit margin and bottom line result as well. Main market, so contribution by markets, Kazakhstan is still was biggest single country in terms of top line, but it's not only Apple. It's already in Kazakhstan we complete several projects on AI data centers, and it is first phase, so we have projects to continue in 2026. And serious businesses. Sometimes it's very nice when you get 50-60 million to your bank account in one day. But it's big work behind it, of course. But we have strong teams to do it. And now we have comfort to support and to conduct installations. In Ukraine, it was also very good growth despite the environment where they are, because lately, Russians even more active with missile attacks and drone attacks on Kiev. So fortunately, everybody in our team, nobody got injured or nobody got problem. But I admire our Ukrainian team. They're very strong, and they develop, and they're very motivated to do business, and they do it. Good growth in Poland, thanks to the team and Przemysław and Joseph, who also supervised it as a regional VP. About Taiwan, basically I want to clarify. Taiwan is not final destination for IT components. Basically, we have order from data center, which could be Europe or Middle East, but we supply components for these orders to known makers of servers in Taiwan. They make finished products, server storage, and then they deliver to our customers. That's why, because our transactions to Taiwan, you see Taiwan. But in fact, it's not that you are supplying Taiwan market. Then by geographies, if you look, I'm very happy also to see and to share with you that every region grew quite coherently, right? About 30%. And Central Eastern Europe and Middle East and West Europe and CIS, right? In others, it's data center components. Because we supply, again, the owners of the data centers would be US companies, but they build data centers in Europe, right? Or they build data centers in Central Asia, or they build data centers in the Gulf area, right? And in EU as well, every single member state got budgets to build AI data centers, and it will continue, we believe, for next 5 years. Because this AI era and AI saga, we need to be careful about that, but need of computing infrastructure is there. It's not short term, it's long term. It's minimum 5 year plus. In terms of product categories, smartphones, good growth eventually. The biggest is, again, the server blocks, and components. This is, number one growth driver for group in 25. So basically, we ASBIS for decades, we are IT distributor of components and building blocks for not only for computing, but for servers, for data center equipment, or for data center infrastructure. And in CPU, we are strong and with AMD and with Intel, and now we work with NVIDIA. We don't buy directly from NVIDIA, but for our project, they supply CPUs to Supermicro, and Supermicro provides us finished servers. Every single project, lots of documentation, releases from US Chamber of Commerce, etc. But again, we do it. We have all processes in place. We have teams in place and competencies, and we continue that. But for AMD and for Intel, we are number one, number two in EMEA. That's why being leading distributor, they comfortable to give us projects also because we have expertise and we do it. On SSD and hard drives, we have all major brands for decades, starting from Seagate, with whom we are from 92 in distribution. It was my first distribution agreement, actually. Then Samsung, Kingston, Western Digital, SanDisk, etc. So we have multiple brands. For that, for RAM, we have multiple manufacturers, and that's what plays a role, because in this time of severe shortage, working with different manufacturers, we manage to provide supply to customers of ours. And that's what they value. That's what they like. And we like, because in the time of shortage, it also allows us to gain a little bit more premium, right? So you saw margin of ours. But we are in a good position to continue to support the growth, being one-stop shop in that area. That's okay. We have Dell and HP. We have Dell in 6 or 7 countries. HP Enterprise we have in 2 or 3 countries only. But we have Supermicro in every country where we operate, and they support us. And I tell you that if you look analytical reports for AI data centers, Supermicro is already bigger than Dell worldwide from 2025. So this vendor become critically important for us, and we have we cooperate with this vendor in more than 25 countries. Right. NVIDIA, we did not work with them before. As I said, we don't buy from them directly, but we work very closely with them in every region. And it's win-win, because they navigate us also for new projects, and they got good level of comfort of working with us, cooperating with us, right? So we are getting the deals and projects, right? Another good thing, if you move to the next slide, please, is that we manage the growth without growing number of employees. In fact, it was 24, if I remember, 30 people less than end of 2024, because we have established teams. For that, we don't need extra staff. The only employees we grow, it's in the new business units. It's US operations, or operations like reopening in Africa or in Saudi Arabia. So it give us opportunity to gain economy of scale going forward, right? The SG&A expenses, they grew, but they grew because many compensation packages are linked to gross profit or net profit commissions. But they are variable, respectively. So we have good setup from this perspective as well. Now, that's it from my side so far. Kostas, can you take care of it?
Okay. Yes, again.
Oh, glad we hear you, my friend.
You hear me well?
Absolutely.
Very good. Okay, guys, it's not only the weather that I saw, but also Polish Airlines decided that I will not fly to you. It's good to see you all. Thank you very much for being there. I will try and give you some more flavor on our financials, although Sergey said almost everything. Now, if we touch a bit the net working capital, we will see that not only the group delivered a very good result on revenue and profitability, but also to the other extremely important KPI of ours, which is cash flow. We managed during this intensive Q4 to deliver super revenues, but even a much better cash flow. We managed to turn around the company and deliver more than 200 million of cash from operating activities, ending the year with a stunning 155 million from operating activities, not to mention the extremely strong cash position of the company at the end of the year. This, I repeat, is a result of the group being able to take opportunities, but also excel in operational efficiency. Overview on the financial condition of the company. literally a zero-geared company that we are today with very little reliance on debt. This makes the company rock solid from all perspectives, given that our net position, if we exclude factoring, is almost zero or negative. Ability of the company to obtain financing is at its best, plus financial cost, weighted average cost of debt for the year went down from 9.9 to 8.5 for when compared to 2024. I repeat, this is a clear indication of how important for us is to have not only strong profitability, but managing internally our cash flows and our financial expenses as well.
So 2026 outlook, you can read this from a screen, but what I want to say, how we see it. Very dynamic. It's so on Apple, we see, and we started quite well. We see double-digit growth this year, meaning from 1.8 billion last year to close to 2.2. It is shortage. At least they say that shortage till end of this quarter. I believe it will be longer because shortage most probably driven by shortage of a memory, because all memory worldwide, all memory producers worldwide, they move to make server memory today. It's massive, right? But we manage supply. Team make a great job on that. Major driver of growth going forward, we see again the continue with components and building blocks for data centers infrastructure. You saw most probably top line growth in January, 78% if I recall. Yeah, we don't promise every month like that. Don't take us wrong. But yeah, we see strong demand so far. But we oversee 2-3 months ahead. And as I said, business is so dynamic. The memory prices update every week. They can grow 10%, 20%. We cannot secure any contract with data center owners on a price. They must accept the price of that time when they need supply. If they don't accept, they're out of the game. Because today nobody in the world can predict, including Tim Cook. Everybody pay new market price. Same time, we see that supply-demand ratio is 80%, meaning we get supply. Not 100%, but we like this kind of terms and conditions because it allows us again to gain a bit more premium on the products. When industry will move from undersupply to oversupply, analysts say after 2030. Same time, I have to say my personal take and my personal opinion that valuations of AI companies are huge, and corrections may take place. It may reduce demand to build new data centers because, in fact, cost of data centers, it's already more than 2 times more expensive than a year ago. And companies, when they plan to build data centers, right, they will calculate. Yes, AI, I mean, okay, many of you analysts, you follow this AI saga and AI-driven demand. Yes, AI is new era, and it is huge technological competition between US, China, Europe. and everyone want to get a pie in this thing, because if you're not supporting AI going forward, then your economy risks to be such economies risks to be behind, right? But what I said, I repeat, fundamental need in the data center infrastructure is huge. Not short term, minimum 5 years, if not more, right? And if Chinese or Americans or Europeans will succeed actually to that humanoid robots, what they say, will serve us soon, right? And we will have here lots of humanoid robots to serve us, right? It requires so completely different level of data computing, right? I will buy my first humanoid robot probably next quarter from China, so I want to try it, right? But we as ASBIS, in era of humanoid robot, our strategy is following. You know, in time of golden rush, one of the good businesses is to sell shuffles. Yeah. Everybody know that. So we don't aim to design humanoid robots, but we designed already, we started production actually here in Poland for last quarter, actuators, motors for humanoid robots. And our motors are well demanded. Market is small yet, but in a couple of years we see it will be growing exponentially. We supply, and in today, I would tell you, the motors cost of hardware of humanoid robot today is 60%. So majority of cost of hardware of humanoid robot is my shuffles, my motors. So we do better motor than Chinese, etc. so far. And that's what we do. It's small business today, but everything was small one day. Yeah. But to summarize, today name of the game for ASBIS is to support this growth mainly for AI data centers. Supported financially, supported from risk management standpoint, supported from supply. So to support the growth, we need bigger credit lines, we need to control more forex, etc. And we are very comfortable to do it. We do it. Yes, Marius and Kostas and the IT distribution team, they're very busy, weekly and daily sometime, right? But this is our core business. We know how to do it. We did it for years, right? And we continue. So we have right fundamentals. We are one-stop shop. We have right contracts, which we do succeed to get years ago. We have right processes. We have right team. That's what I want to tell you and share with you about outlook of 2026. And then, Kostas, if you like to add something.
No, Sergey, I think you covered it all. And I think we are ready to take any questions our guests have.
I have a simple question on tax rate. Probably Pillar 2. Is it proper to you? At least as...
We lived through that already. Costa or Mario, you take it. Pillar 2.
The question is, the tax rate is quite high. It's 21.5%. It's over 20. Pretty high, right? Is there any possibility to reduce it in the future or do something about it? Or will it remain like this in the future?
Mario, you take it.
Yeah. It's a good observation. Given the introduction of Pillar 2 full impact in 2025, we expected the effective tax rate of the group to increase. We are sitting before with an effective tax rate of about 18%. Now we are sitting with about, rightly said, about 22%. We are trying different directions. We are running different projects with tax experts to legitimately see what else refinements we can effect to further reduce that 22%. But if one, and especially this is addressing the investors and the analysts, want to draw their projections, I would ask them to assume 22%. Though we may see certain improvements, I believe that 22% is a fair, effective tax rate to plan on.
So you had extremely nice revenues in January. Can you tell a little bit more what's behind that?
It's combination. The major contributor again, the data centers component projects, but also Apple was with 25% growth year on year. I like shortages when I have supply during shortages, and you manage it so far. And consumer distribution also showed growth, low double digit, but growth, right? That's what is behind.
So this
project.
There should be like triple digit growth, yes? Okay. And like the nearest months, do you expect this trend like to continue?
We oversee, okay, we almost finished February, right? We publish when we publish, but it was very strong as well. Right? We oversee 2-3 months ahead.
Yes.
Maximum. Because as I said, it's very dynamic market. There are many projects, but we supply only what we can supply so far. That's why, prospects are good.
Okay. You say that you sell like a lot of NVIDIA's GPUs, but you don't do it directly with possible.
We sell servers on GPUs based servers. Yeah.
So like, is it possible to have a direct business relationship with them, or like?
We don't need it. I mean, we have direct business development with them. So their sales team work with my sales team on every project, right? It's very transparent between us. Do I need to buy, or I have Saga to buy a GPU from NVIDIA? I still need somebody to build a server. I'm not building servers on GPU, right? So it's anyway, it goes to Supermicro. So.
Okay. In the financial statement, we've seen that U.S. markets appear like in top 10 markets they pick in fourth quarter. It's same like Taiwan. So like you buy, they're like players over there buying you.
U.S. market.
I think it was US.
Yeah, we sell IT components to U.S. companies, but the components go somewhere in Europe, Nordic, Scandinavia, Finland, Norway.
Okay.
Yeah.
And you also have like impressive growth in Germany. Can you say us?
Similar story.
Same story. Okay.
Yeah.
And I think the last question for me, costs, general costs, they increased a lot. Is it like some sort of reserves or something else?
Combination. Costa, maybe you take it.
Yeah, I take the. There are three major reasons for the increase of expenses of SG&As. Yes, the first and obviously the most obvious one is that we deliver more gross profit, more net profit. We pay more compensations to the indirect or to the people that are getting commissions and salaries based on the performance. The second very important factor, if we take all the expenses of 2024 and we extrapolate the exchange rate of the local entities, we used to run in December 2024 euro to dollar rate 105 as opposed to 118 in end of 2025. These are the two major ones. Plus, we didn't have offices in the US, in Italy, in Saudi, in Uzbekistan, with multiple expenditure there that have not been delivering as yet to the group. These are the three major reasons of the increased expenditure.
Maybe the last one, the gross margin, it's improved significantly. Do you expect like further improvements in the near future because of what's happening in the memory and the short supply, not only in memory but as well in Apple? So it's like possible for the gross margin in the first or second quarter to reach 80 something.
We'll see.
To have
It's possible. It depends again. It's only driven by supply-demand ratio, right? Including Apple. But Apple doesn't allow us to gain much price, to raise prices much.
Yes.
And it being like 40%, they were being 40% of our revenue, right? It's serious part, which you cannot, we gain a little bit, but you cannot gain much. However, with IT distribution, IT distribution and respective with these components, is more flexible. So it is possible.
Hello, congrats on your results.
Hello,
You already addressed one of my questions regarding tax rate. I also wonder about using of factoring. Why do you use factoring to such an extent, whereas your cash position is so strong? Does the conditions of this factoring is better than keeping cash? Oh, I mean that the potential alternative for using of factoring is using your cash bill, which gives up
Piotr,
2-3% yearly.
I don't see, but I recognize the voice of Piotr Grzygowski. Thank you for the question. Factoring, in which we see there, it is used from us as a very good tool to hedge our positions, especially in countries where we cannot really have much or any other financial tools to hedge. So yes, we have enough cash, but factoring is necessary from our side in order to turn the local balance sheet into the same currency and save ourselves from exchange rate movements. In addition to that, factoring is used in multiple other countries to pull cash early and pay and gain on early payment discounts. If you remember, our factoring lines used to be much highly utilized in the past years. Now what we need is what we use, and the major reason is mostly to hedge our local balance sheets.
Okay, so it's complementary to drawing a debt in the currency that you operate in.
Look, factoring, like Kostas said, is extremely important tool for us for hedging local currencies.
Understood. Thanks. And the perfection concerns guidance for 2026. I don't expect any fixed numbers for now, but do you plan? Do you even plan to publish any guidance for 2026?
Look,
Account the current situation, geopolitical and financial.
Look, first of all, let's see that first year ASBIS did not provide forecast. We grew significantly. It's a joke, but look, our position, as I said, today it is so dynamic market. And but as soon as we see it's like more settling and it is more clear, we will come back and we'll provide forecast. We remember that and we work like that. But for time being, we are not ready.
You said in the past that you don't expect to that revenues from data centers will increase, will overtake your revenues from smartphones or Apple components. And how do you? What is your approach now? Has something changed?
When did I say that?
Maybe.
I did, Sergey.
I did. Okay.
Yeah, but you know what?
does the situation look now?
Different. Yeah, look, the growth of this data-centric equipment, it is, like you said, not double-digit, it's sometimes triple-digit. And it's not small business for us as well, right? Already in terms of revenue for group, that's why it may be bigger. Right. Same time, again, we are on a smartphone segment. The segment itself, it doesn't grow anymore. Right. We are gaining share. We are growing because we are on emerging markets. But the growth is between 20 to 30%. That's what you see. Yeah. A good question.
So maybe now a question regarding more the financial statement. Did you have any write-offs in Q4 that's affected P&L?
We had some write-offs, but nothing outside the ordinary course of business. We had some bad debts to write off. We had some provisions for inventories, but nothing extraordinary.
And in general, what was the amount of this write-offs?
It is, I don't recall the number exactly, but it was between 1 and 1.2 million, where it was budgeted before.
Provisions were a bit more, yeah.
Maybe 1.5.
I will follow up on this if you don't mind, because if you compare the report for Q4 with the prior one for Q3, actually the provision for the inventories increased by 3.3 million, which is quite high in my opinion. And for receivables, 3.8. So is there some inconsistency, or I'm talking about the increase of provision for current year. So it's total. If we mix this together, it's 7 million. It's pretty much, I would say.
All right. Look, the question I answered was referring to Q4 standalone, and now you're referring to the overall year, yes?
No.
Yes.
Change between Q3 and Q4, because I cannot see Q4 alone, but I can see the change, how the provision changed, and the change in Q4 alone for inventories 3.3, for receivables 3.8, which is quite high.
I think you're looking at the year, yeah?
I compare prior report with current report.
The provision for obsolete stock in note 13, yes?
Mm-hmm.
That's what you see, right? So we see the same thing, right?
Yes.
It was 9.6. It was that one. So there is a 3.7 provision for the year, yes?
Yes, but after 3 quarters, it's been 0.4. And now it's 3.7, as you mentioned, exactly. So the increase is 3.3.
Look, we can provide you analysis for that.
Okay.
I repeat, we did not have one-offs, and usually our provisions are coming into towards the end of the year. All right, we accumulate and we make them at the end of the year. But Marius and myself will make sure that we send you analysis for both inventories and receivables, so you can see, and we resolve this.
Perfect. Thank you very much. And maybe one last question for the interest expenses. The net itself has been rather stable between last quarter and this quarter at this end of it. But the interest expenses increased quite materially. I think everybody noticed worse financial result. I mean, it's result from financial activities. So why have interest expenses increased in Q4? Or why was the financial result worse?
The question about Q4 increasing interest expense,
yes.
I think Piotr mentioned it earlier, it's cheaper to borrow on a cash line versus on the factoring line. So to the extent we borrow in hard currencies, namely euro and dollar, we borrow this money more cheaply. Therefore, we have a tendency to use throughout the year. This is representing the quarter and the year. We borrow more from overdrafts and from loans. Yeah, we do use factoring. We do need factoring in the countries because of the reasons mentioned earlier. But given the huge growth exceeding 800 million in the course of 2025, we had to grow the lines and we had to increase the utilization of these cash lines. This brings the increased interest expense shown on note 7 of the financial statement.
Okay. I have one more question. You're writing the financial statement about entering new markets in Africa. I'm just wondering whether it's something material in terms of
It will start, so this year will be starting here. We selected to enter locally Ghana and Cote d'Ivoire because our analytics showed and our practice showed this is two most transparent markets where we can do local operations. But we want to have a base there in that part of North Africa to supply other countries from there, not only locally, but it will not be material this year. It's starting here.
Okay, and next year, potentially, just to understand what kind of business you're fighting for.
Wait, in a couple of months we will make an announcement.
Okay, thank you.
Can you tell something more about your investments and generally cooperation with Olaf, with Bank and Olufsen? Because you are making a very big investments.
Mm-hmm.
And what is the percentage of sales or profits? Is it just idea to support ASBIS? So what is the
Okay. We distribute Bang & Olufsen products exclusively in 40 countries. In Africa, Eastern Europe, Middle East, and former Soviet Union. Business itself, it's about 40 million business for group with good double-digit margin. But we also see that to conduct retail, it's quite interesting for us as a part of our premium and luxury retail business unit strategy. And for us, it's also good way to penetrate new markets which are not known to us. Like I say, US. In Italy, we also started with this retail business unit, but we learned how to conduct business and we learned it quite fast because connections also what we get through B&O business is quite interesting.
Do you have an idea of increased business with Samsung after this buying shops?
Yeah, look, again, first, yes, we do have midterm. Because, okay, Breezy already have contracts with Samsung on second life products, but this is a bit different. However, we need 6 months now to make sure that we fix all basics in this business unit what we got from January, right? Because it was good, interesting business unit, but it was heavily undercapitalized here in Poland, right? We already provide I think double credit lines with Samsung for this business unit here in Poland, right? Yeah, now we more and more often we talk with Samsung on different level.
And different market?
And yes, and for different markets as well. We have established good dialogue with Samsung now, because now we are in a business.
Because there will be competition between Apple and Samsung.
Apple and CIS. I don't have Apple for Eastern Europe. We try not to mix up.
So, given the higher prices of RAMs, and maybe it could switch to other components as well, what inflation do you expect in midterm 26
Inflation in terms,
on your total portfolio?
I didn't get the question actually. Inflation in terms of what?
Your unit prices.
That's I don't know. Nobody know. We just start every Monday with a new price list from the vendor. Yeah. But it cannot be forever. These prices growth mean in a huge incremental cost for data centers. And then AI guys who use these data centers, right? Question, do they have enough business, or for how many years they have to extend return on investment? It's not for, it's not so flexible. Yeah, that's why I said it's a very interesting question. And we monitor the situation. But again, our job, we supply to demand what we have. I hope it will be less than last year, because last year is triple the cost of RAM for servers. That's why every maker of memory, they switch from memory for computers or smartphones to build memories for servers, because they gain so much additional premium. Also, memory makers and big corporations, they building up new factories for memory. It will take a couple of years, but then also we need to monitor when it will be oversupply. Because we've been in the industry many years. We face undersupply situation and oversupply situation, right? But again, we are living in the era when this AI is not just future, it's next to us. And every country, every region doesn't want to lose competitive advantage, not to use this AI assistants and agents and predictive AI, right? It's a big game between China, US, Europe.
No, we go with the questions first, and then I will make a comment, actually.
Guys, I need to leave in 5 minutes.
So regarding your business activities like AROS, Breezy, and operations in South Africa, could you give us some color on the revenues and net result that these businesses made in 2025?
South Africa in 25 was 50 million. Breezy was about 100 million. And AROS, we just started. AROS is not big. What I remember this year should be about 10 million, but with margins 30-40%.
Okay. That's where I understand the revenues. And what about net results or these businesses? Are they profitable?
Okay. AROS should be profitable from 26. In Breezy was still in investment mode, but we easily can gain profit from Breezy. But our strategy is to expand and to get bigger pie. Yes, now we expanding in Europe, we expanding in Africa, and it's very fast growing sector. It's not small anymore. So for us, it's more important to gain and increase portion of a pie for us, meaning market. Yeah. But it doesn't eat much of our cheese.
So could you give some rough numbers of these losses that Breezy and AROS made in 2025?
of Aras, I don't remember. So probably we bet. Kostas, do you remember, or we better answer?
I do not, Piotr. I will
we will
gather
send
and
you.
share with
We
you.
will send you analysis more precise. I don't want to speculate.
In last years, you were developing a lot of many new businesses. Did you close any of them?
But you mean startups, or what kind of thing?
Yes, I am thinking about different businesses you started. You started to develop. And if you decided to close any of it.
Look, we on Aras on robotic, we started to work on 6 or 8 different kind of solutions. Now we narrow it down to 3. Yeah.
But your own brands like the Studio and Kano, they're still developing, yes?
Yes, still develop. Okay, Prestigio is, how to say, is in incubators. And incubator now we don't have much of expenses. All right, it is very small. Iano is growing as all domestic appliances. Lorgar gaining. We finished all developments last year, so already we start selling from end of last year, and they predict us good growth. Small business still, but good growth this year, and it's more loud and well received by customers, by retailers. Canyon was kind of flat. It's accessories, mobile accessories, etc. But for this year, we see good growth opportunity with Canyons. But again, it's how to say, about 20 million business.
Additional question about Breezy. Do you believe that Breezy can benefit from these trends on the market with increasing prices of memory and smartphones as well? Do you believe that?
I cannot. Piotr, I'm not sure whether Breezy would benefit from increases in memory, given that it will inflate the number, the absolute number of the devices, and the nature of Second Life products. It's also a price sensitivity included there. So I would be more neutral as opposed to positive with these increases in memory.
Okay. I thought that it can be more appealing for customers to buy at discount used products because of increased prices of the new ones.
You see, the new ones, if we see, because first of all, we haven't seen inflationary pressures on brand new smartphone devices yet. All right. So all I'm trying to say is that if it will happen and a brand new smartphone will cost from 1,500, 2,000 euro or dollar, and then the second life will become from 500 to 800, which again makes it less affordable, given the fact that the purchasing power of people will not grow so fast.
So maybe I have also the question. Can you maybe once again comment on the gross profit margin, which showed a very good increase quarter on quarter? My question is if it stems from the inflation on your inventory, or maybe better good purchases, or maybe you managed to increase the margin on data centers.
It's a multi-layer effect. Yes, part of it is because of shortages. let me tell you that for the big projects that we had pre-agreed pricing, there is no chance that you can come in and raise the price in the middle of the project. You sell at the price you have agreed. However, now what this boom has created an adjustment of pricing almost weekly. So by next week, you get better pricing and you might get an arbitrage and make a better gross profit margin. I want to remind us what we have been discussing in June, July, and then September November when we met. The ability of the group to bundle and sell more products, higher margin products, when it sells to all these big data center providers, because that time it was mostly SSDs and hard disks for servers. Now memory became extremely fashionable, extremely demanded. So because we have the portfolio, because we are the one-stop shop for these clients, we have the ability to bundle and increase our gross profit margin, taking also the advantage of shortages, of the price movements and the inflationary pressures, as well as the extremely high demand that it is around us. So it's a combination of factors that drove the gross profit margin up. And I repeat, and I want us to again to remind that during Q2 of last year, when we announced the 6.67 gross profit margin, we said and we declared that we believe that we reached the bottom on that respect. That's why in Q3 was higher. Yes, in Q4 was much higher. Now Q1 in front of us, having seen this growth and having seen how the demand is around us, we are very optimistic. But like Sergey said before, we cannot be certain for what's going to happen from a period of more than 3 months now.
As far as I remember, in Q2, you said that gross margin for data servers was around 4%. Does the current situation allow you to increase this margin up to maybe 5%?
Yes. Yes, the current situation allows for higher gross profit margins on these product segments.
Maybe can you comment on the situation in Kazakhstan regarding the illegal competition? Any changes?
Yes. Situation in Kazakhstan is better than it used to be Q1 last year. Much better, but it's not optimal. The situation with illegal traders is there. Some of them went out of business, but some new ones appeared. We know how to work with them. We learn how finally to work with them. The reality is that the exchange rates outside Kazakhstan did not help them recently. So they cannot buy much cheaper from outside and get also the advantage of the illicit importation. This is why we are in a position to gain some more market share, given that also the email registration legislation came in. So we are optimistic that if this situation will continue and the government really imposes all these strict controls, we can be on the winning side of things. I repeat, the situation is better, not the optimal we want to see yet.
That's good. Thank you.
I have a question regarding the shortages in memories and SSDs. So AB during the conference today said that the memory producer, it will take more or less 2 years to build new factories. So do you expect at least 2 years of shortages, or what is your market expectation in these terms?
I confirm that the ability of manufacturers to build a full-scale manufacturing plant is between 18 to 24 months. Now, so the statement that they did is valid, and we also confirm it. However, the demand and how and where these manufactured modules will go is very important. If it will only go to the data centers and it will create a shortage either on PC computing or on laptops or on all these segments, then we will see an anomaly in the market. All right. However, from what we see, memory makers that weren't so important in the past, now they become more and more important. And what Sergey said before, the demand to supply ratio is 80%. So for every 100 there is a demand, there is 80% supply, which is not a bad thing in our days. At least we get 80% ratio. I don't know about any others, so I cannot speak for them. But it's a matter of fact that memory is today like gold in our markets.
So basically, these 2 years should be should put ASBIS in very good positions as you are a big supplier and probably you have some advantages in the supply of the goods, as far as I can understand this. Yes.
We have the official distributorship, which makes us puts us on the priority list to get supply. All right. We have the advantage that with one bill two, the suppliers get access into multiple markets. Therefore, yes, de facto, we have an advantage to get the supply. Now, what the situation will be in the next 2 years, 3 years, nobody obviously can predict. A potential conflict in Iran might change things dramatically and might postpone things dramatically because we don't know how the overall situation might look like. But as a general statement, we are optimistic on what the situation can be going forward. So we close it. I once again apologize for not being there. Thank you very much for everything.